Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Wednesday, December 13th, about 6 a.m. Central Time. Overnight, the precious metals are mixed after yesterday's flat session. You have February gold up $4, $19.97. March silver unchanged at $23. March copper down 1 at $3.77, and January platinum down 8 at $9.22. Platinum's had a couple good days in a row here, really pushing back up. It's holding that $900 quite well on the downside, and it tends to be resilient on pushing back up. Looking at some of the overnight headlines here impacting the precious metals, the UK GDP, it contracted 0.3%. Why that's important to precious metals is because if you look at the currencies across the board, the British pound is down 0.3%, really kind of leading the charge. What that does is it works inversely with the dollar, so the dollar's bumping up just a touch, up just under 10 basis points here, right under that 104 level. That's kind of a critical level. So later on today, we're going to have the Fed, and they're expected to hold steady on interest rate hikes. Remember, we've held steady for about 3 consecutive meetings right now, and we will see a bit of a pushback from Jerome Powell on any kind of discussion as far as when they're going to cut rates. So it's all speculation. It's all pricing in the Fed fund futures when those rate cuts are going to happen. Now with the UK GDP slipping, they're saying that their first rate cut could be in May. If you look at what we're looking at, it's most likely March for us, but Powell's going to come out and say it's way too early to tell. So that Fed meeting is going to take place at 1 p.m. Central Time. 1:30, we'll see Jerome Powell have his press conference. They'll release the dot plots and where they believe the economy is going, and you can see that there's been a pretty good downtick here. Labor market tends to be a little bit more resilient right now, and that's the reason why they're skeptical on doing anything as far as cutting rates or even discussing that. So if you look at some of the critical levels of support on both that gold and the silver market, we pull up here silver, you could see that silver's been really slacking. It's broken below the 200-day moving average, broke below the 50-day moving average. It triggered bearish on as far as the way the trend is going now. You got stochastics dipping into oversold territory, DMI minus is crossing over plus, and then we've broken below all these key levels of support. We did push below $23. I do see value anywhere in the 22s down to about $20 here on silver. I think silver is going to be one of your better performing commodities next year, but into the tail half of the year is when it really gets explosive. Now, every time that I've tried to time this thing right, like waiting for that last correction on the precious metals to get involved with, I tend to miss it. So that's just the way it is. So if you're going to look at this, you might want to pre-position in there. So if you get any kind of serious correction below $22, into the 22s, down to $21, $20, I think you got to hold on the long duration, looking at, July, September, December of 2024 on the silver market. Same thing with crude oil. I think the back half of the year is when you see the contraction in the GDP start to come down, and you start to see those expectations for rate cuts start to accelerate higher, and that's where we see growth in the economy again. So looking at the gold market, you'll see that holding a bit better than the silver market. It's kind of, since it made that 2152 peak, then it's pulled back. Now we're kind of fluttering between the 200 and the 50-day moving average. We're more of a neutral trend at the moment here. We're holding that support from that last sell-off, which was about the 50-day moving average, came down to about 1965, and the 200-day moving average kind of slowly sloping up, as well as the 50-day moving average. So you got any questions, futures option trading? It's going to be a really busy day. A lot of volatility, I think, in the market here, but some good volatility. So we welcome any prices lower on precious metals right now. And then on crude oil, we're looking at long-term value. We believe that OPEC will take some kind of stance. They will maintain their cuts. The economy, once the Fed starts to cut, will start to pick up again. And so that's why we let favor the back half of the year. If you got any questions on futures option trade, give me a call, 312-858-7303. Remember, futures option trading involves risk of loss, may not be suitable to all investors. Good luck, good trading.